What's good, YouTube? It's your boy Doyle back with another video. Today's video is part 2 to the basics of futures. Now, if this is your first time watching this video, you need to click off this video and watch part 1 so you can understand these assets, so you can understand the other information that I have on part 1 of this series, because you're going to be a little bit confused. This part, we're going to be focusing on risk management, how to calculate ticks and points, understanding the asset movement, how they calculate the ticks per asset, and so we can understand our risk, because that's the most important. We understand that day trading is it's all about controlled risk, like understanding what risk you're about to put on, and if you're putting on too much risk, you can blow your account, you can lose a challenge. So once you understand the risk management behind every single asset, then you can actually be okay with whatever money that you potentially could lose. You know what I'm saying? So again, click on the first part of this video before you start this one, because this one is mainly gonna be mathematics, okay? If you're not good at math, I'm sorry, but we're gonna have to get this done. You know, you gotta understand this. So let's get into it. Now, before I get started, write this whole screen down, this whole thing, write it down. I'm gonna give you a couple seconds so you can write this down, because it's super important. All right, now let's get into it. The assets on the left-hand side, it may not be the ones that you trade, but these are the ones that I'm gonna use for this example. These are the main ones that I'm trading. So we're gonna base our examples off of these two mainly. I trade majority of these, but we're gonna focus on S&P 500 and NASDAQ. Now, if we go to the right-hand side of S&P 500, it's a tick management, and it's a 0.25. Dollars per tick, $12.50. So 4 ticks of this will be considered 1 point, okay? 4 ticks will be considered 1 point. So S&P 500 move in increments of 0.25 on each tick. Each tick would be 0.25, 0.50, 0.75, 1 point. So every single tick, 12.50. Another tick, 12.50. Another tick, 12.50. Now another tick, 12.50. Now we at 1 point. So 4 times a quarter will be $1. So remember, 4 ticks for ES, NQ, micros, ES, and micro NQ, all move in increments of a quarter on the chart. Remember, this is just for the chart. This middle column is for the chart, so you can see the coordinates on the right-hand side of TradingView. This side is the money. This is what we really care about. You know what I'm saying? This is what we're gonna focus in on, but we gotta understand how it actually moves per tick. Because if you look at gold, gold moves 0.10 per tick. So that means we gotta move 10 ticks just to get 1 point. You get what I'm saying? So if we times this by 4, which this would be considered 1 point, and then we times that by 4, how much is that? That's $50 per point, okay? But it's 4 ticks to make a point. For these though, remember, for these though, 4 ticks to make a whole point, but it's 10 ticks to make a whole point for gold. Now, let's go ahead and go to the next screen, because I want to show y'all the actual equation on how you can calculate your risk when it comes to placing positions. Now, again, TradingView is going to let you know this before you place a trade. You know, for anybody that trade on TradingView, it literally will let you know how much you're risking, and it'll show you how much you're going to lose. But this is mainly for people that want to actually understand this manually and don't want to wait on TradingView and all of that, okay? So let's go ahead and get to the next slide. All right, so on this part, I'm going to test you to see if you can do the equation for yourself, so you can actually be using your brain on when a good setup is there versus a bad setup. Now, what do I mean by a good setup versus bad setup? Based on your stop loss. That's what we're basing it off of for this illustration. Now, let's use NQ for this example, okay? For this example, we're using NQ, and we got Sabrina right here. She got $1,000 in her trading account. She ready to go, okay? She ready to make some money in the futures market. She see a supply setup. She ready to sell. Now, she got $1,000 in her trading account, and she want to use 8 contracts. 8 contracts on a supply setup with a 5-point stop loss. Is this a good play for her to take or a bad play for her to take? I'm gonna give you a couple seconds. Now remember, you must understand what's the dollars per tick. And remember, NQ move in increments of 25, just like ES. So if it moves in increments of 25, 4 ticks will be a point. How much is she risking? All right, let's go ahead and do the equation. Now, $20 a point is for NASDAQ. Let's get that out the way right now. $20 per point. She have a 5-point stop loss, okay? So we're gonna times that by 5. That is $100 right there. If she use one contract. If she use one contract. If she use one contract, she's risking $100 for a 5-point stop loss. But if she got 8 contracts on that, how much is she lose? How much could she potentially lose now? She could lose $800. Now, if you said that this was a bad play, you're absolutely right. You're risking 80% of your account. No, absolutely not. If you go in on a supply setup, Sabrina, if you're watching this, with 8 contracts with a 5-point stop loss, you're potentially about to lose $800 on that 1,000. Absolutely not. Absolutely not. Don't take that trade. Lower your contract size. Now, imagine if she was trading. Imagine if she was trading the micro. Remember, it's 1/10 of the 800. That would be considered an $80 loss if she was to take that on the micro. My fault, y'all. My fault. Not the ES. NQ. Because this is a NASDAQ example. My bad. She'll be losing $80 if she was to take this exact same play. 8 contracts, 5-point stop loss, but on the micro, she'll be losing $80. You see the difference from a $1,000 account? You only losing $80. That's what I mean by you gotta understand your risk and what you're trading. This would be a good play if she was trading on the micros. This is not a good play if she's trading on the mini. You get what I'm saying? So I'm gonna take it to the charts and we're gonna go through it a couple of times on the charts and I'm gonna wrap up this video. But I hope that this is making sense. The equation is, first you must understand what is the amount of money that you're going to lose per point. That's the important part, per point. Remember, if you looked on the previous slide, every tick would be $5 for NQ. But we times it by 4 because 4 ticks is a point. So that's $20 a point, 5-point stop loss, $100. You feel me? If you got a 5-point stop loss. And that's if you have 1 contract on it. If you got 8 contracts on it, you lose at $800. You know what I'm saying? But on the micro, you only lose $80. Now let's go ahead and go on TradingView and let's wrap up this video. All right, so now that we're on the charts, this is probably the most important part of this video because we're on the actual charts. This is not the board. You actually see the setups, understand the ticks, and just see it in real time so you can understand exactly what you're doing. Now, for this example, we're going to be using ES. Now, remember previously what I wrote on the board, you need to understand what is ES dollar per tick. So how much is it worth per tick? And then you understand how much is worth per point. And then you can do this manually without letting TradingView, I guess, calculate it for you. Now, on the right-hand side right here, you can see that they will calculate it for you. But the purpose of this video is just to understand the tick and the point system in the first place. Now, again, like I said, if you want to connect your broker, you go right down here to trading panels right at the bottom, click trading panels and scroll down. The futures brokers will be right there once you scroll down and you will just connect your broker and you can trade directly off of TradingView. It just really depends if your futures broker offer it. Not all futures broker will offer you to trade on TradingView. So it's really a perk. It really just depends on the broker. I currently use TradeAvate. I know TradeStation will let you trade on TradingView, AMP, interactive brokers. Like it's a few brokers that will allow you to trade on TradingView. But let's get into it now. Right here, you would click the plus sign on the watch list, and that will pull down the list. You can see all the symbols that you need to add, whatever you want to trade on futures. It's literally right here, self-explanatory. In the upper left-hand corner, you click indicators. You can add your moving averages or however you trade, your VWAP. It's just a lot of things that you can add to your charts, but that's besides the point. Let's go through a real life example of a setup that we're going to have maybe a 6-point stop loss or an 8-point stop loss, and we should know how much that is before we even calculate it with a TradingView risk calculator right here. Now, let's go ahead and find the setup real quick. Now we have this resistance setup right here. This is a perfect example. And remember, we're doing this all manually. The market is closed, so it's not going to use these correctly. But when you do connect your futures broker to TradingView, these numbers are going to be shifting. It's going to be different because the market is actually moving. Right now, the market is closed, so we're not going to use an example with real life market movement. Okay, so we're just doing the math so we can understand exactly what is the risk behind these trades. Now, say if I took a resistance setup right here for a sell, and I had let's say a 5-point stop loss. Okay, a 5-point stop loss. First take profit 5 points. Now, from the previous writings that I had on the board, every point for S&P for one contract is $50, okay, for every point. So if we have 5 points, what is 5 times $50? $250 if you're only using one contract. So this little small move right here is $250 if I put on one contract for that. Now, say if I wanted to put on 4 contracts for that, what is 4 times 250? That's $1,000. That's literally $1,000. So say if I put 4 units, you see the USD risk. That's $1,000. If I put on 4 contracts, USD risk, $1,000. You feel what I'm saying? So I hope that this is making sense. Also, you can go on here right here, and it would literally say 5-point stop, 5-point target. You can also see at the coordinates right here that we're moving in increments of 0.25. Like I said on the board, that's the increments that they're moving as, literally 0.25. And this is just a perfect example of a 5-point stop loss. You're risking $1,000 if you put on 4 contracts, and that's pretty much it. So hopefully that this is making sense. We can use another example on NQ real quick before we get off of here. But again, TradingView is going to calculate it for you. So let's go ahead and use another support and resistance setup. All right, so for the last example, we're going to use NASDAQ for this resistance setup. So I'm going to mark up my resistance right here, and we're going to put on our take profit in stop loss right here. Let's use a 20-point stop. So right here, that's a 20 points. That's important. Okay. Now let's go ahead and go for a 1 to 2 risk reward. I'm gonna get it right. Okay, whatever. Let's just use that 1 to 2 risk reward. Okay. Now, if you have a 1 to 2 risk reward, now this is a super complex question right here. If you have a 1 to 2 risk reward, risking 1 contract on this, how much is this worth on NASDAQ? We're not going to focus on TradingView doing it for us. How much is this worth? Now let's do the equation. NASDAQ moves in quarter increments. Okay. NASDAQ is worth $20 per point. Okay. So a 20-point stop loss worth $20 per point is what? $400. So if you lose this trade, you lose $400 using 1 contract. So the key is just to understand how much is it worth per point. Okay, that's the key. So you won't overcomplicate this. How much is it worth per point? At that point, you just times it by how much your stop loss is. So how big your stop loss. So $20 per point on NQ, times it by the stop. Okay, boom. 20 times 20, 400. Cool. Let's not overcomplicate it. Now, if we have 5 contracts on this trade and it's worth 400, how much is that? That's $2,000. Okay, literally $2,000. Okay. Now let's go ahead and put this in the calculator. So right here for units, that would be 5 contracts. And how we convert points into ticks, all you do is just times it by 4. So this is points times that by 4, that will convert it into ticks. So right here, that would be 80 ticks. Okay, because remember, we converted 20 point stop loss times it by 4. That's how you convert it into ticks, and it will literally convert it into ticks. 80 tick stop loss is equivalent to a 20 point stop loss. Okay, now look, they literally calculated for you. If you got a 80 tick stop loss, which is 20 points, it's $2,000 risk if it hit your stop loss based on you having 5 contracts. Okay, so remember, like I said, TradingView will always do it for you. But if you want to learn this manually, then this is just an equation. You're timesing the dollar value per point, which is NQ is $20 per point. You times that by what your stop loss is. Okay, cool. You get that number. After you get that number, you times that number by the amount of contracts you put on. Okay, so the amount we put on was 5, and your stop loss will be considered a $2,000 stop loss in a sense, you know. So let's do the math. If our stop loss is $2,000, but we're going for a 1 and 2, how much is take profit if we win? If you said $4,000, you're absolutely right. Okay, so let's not overcomplicate this. Again, TradingView will help you with the equation if you're not understanding. Also, if you want to risk your account in percentages, TradingView will also help you with that as well. If you click right here, they literally say percentage risk. I mainly risk my account as far as USD risk, but that's just me. You can put your take profit in if you want to. It's just self-explanatory. Definitely play around with TradingView before you actually go on a live account. Just test it out. Again, if your futures broker allow you to trade on TradingView, that's even better. But yeah, other than that, let's not overcomplicate this. I hope these 2 videos has helped you. Definitely rewatch this video and the last video over and over until it clicks, and then definitely test out whatever strategy that you learn on demo first, and then it's time to actually get funded or get on a live account and start growing your account. But yeah, I hope I helped y'all on this beginner 2-part series. I don't want to go too much over it because a lot of people that watch my channel are experienced, but for the new traders, these 2 videos are going to definitely help you and kickstart your career with trading. But other than that, let's keep it going, man. Good luck on your journey. And if you always need help, just hit me up on Instagram. I can always try to assist you if you're brand new to trading. And if you're already experienced, I'll see you on the next video. But that's all I got. Peace and love.